Thank you for visiting my blog again. I was just wanting to let you guys know of an update. Some major changes to the dividend investing portfolio. I've owned shares of Walmart for many years, and for some reason, when you know the company is going to post good numbers, all of a sudden people just go, "Oh, that wasn't good enough." So the stock goes down, even though technically it should go up. Over the last few months, I've been debating selling my shares, or at least a portion of them. And recently I did. My personal price target of Walmart stock is about $68.50. The price hit about mid 75 range a couple weeks ago, and I sold at about 74.50 a share. I sold about half my holdings, which actually ended up being a good move. Sure enough, earnings release, numbers are pretty good. Stock goes down to $71, $72 pretty much within a week. With the proceeds from the sale of Walmart, I purchased three more companies. I've got Triangle Capital, which is a finance company that basically invests in businesses, and I will post a link in the video description to pulling ourselves up financially. He already went through Triangle Capital a few times, and you guys can find out some more about that. Great dividend play. It's been 7 to 8% yield, and yeah, it's as earnings go up with it, the price target goes up, and so does the dividend as well. I also bought some Chevron. Although the shares are pretty expensive in terms of price per share, the actual value of the stock is way higher than the stock price. To me, that stock is so undervalued, it's crazy. The only thing I don't like about it, though, it only has about a 26% payout ratio. I feel like they can pay out a lot more and really reward the investor. I do plan on holding it long term because I know that I should be able to get some capital gains out of it as well. The last company I got into was UHT. Although it is a REIT like RSO, it specializes more in the health industry, such as hospitals, doctors' offices, whatnot. And RSO, Resource Capital, they are more commercial properties, such as strip malls and whatnot. Still using my current methods to choosing stock. I basically look at dividend champions. I'm going to actually increase that to be checking out the dividend contenders as well. A dividend champion, by definition, is a company that has raised its dividend consistently over a period of 25 years or more. They've got dividend champions. They've got dividend contenders. I mean, David Fish has really got this cool spreadsheet that you guys all need to check out, which I'll put a link up to as well. It tells about companies that have increased dividends for 5 years, 10 years, 25 years. He's even talking about making it a separate column for companies that have done it for 50 years, which is just insane. Anyways, UHT, at the time of the purchase, it had a payout ratio of about 39% with a 5.79% yield, which gave it a RRR value of 1450, which is pretty high. Chevron had a RRR value of 11.88, which is also good, and Triangle Capital was sitting around 10.05. Most of the dividend champions that I've been looking at with yields of 3% or higher are pretty much in the 6 or 7 range, so just by my method, I'm looking at these 3 investments as relatively safe. At the time of the sale, Walmart yield was sitting around 2%, and I just knew that I would do a lot better with my strategy and selling those shares, what shares I did sell, and reinvesting into higher payout or higher RRR values. That is, stocks that have good ratios of higher dividends to the lower payout ratios. So thank you for watching.